Hello, everyone, and welcome back to another episode at NOVARISE Invest. So, today we have a hot topic. This is one of those videos that I recorded and I just simply cannot afford to just send it over edition and let it sit for another couple of weeks before it was released. So, what I decided to do is to create this episode as if it was some kind of a live class. And what I'm going to do today is just simply go over the 5 reasons why you should not be investing in real estate right now. And by right now, I mean November 2020. So, without further ado, what we're going to do is just to dive into the presentation. And what we're going to do here, I'm just going to switch over the screen so you can take a look at what I've had prepared for you today. And here we are. Don't buy real estate now. And these are the 5 reasons why. So, number one, why shouldn't you buy real estate right now at this very instant? Well, because one, there is very high demand and very low supply. So, what does that create? It makes the houses that are hitting the market come out with a very, very high premium. And in order to evidence that for those who actually need proof, what we're going to do, we're just simply going to go straight into Google Chrome. So here you go. This is an article from back on October 22nd. And the Wall Street Journal already reported back then that US home sales are rising to new 14-year high, offering a boost to the economy, right? And if that's not enough for you, I have another article which came out very recently, back in November 12th in 2020, and it talks about how home prices are basically just rising everywhere. And why is it that it's rising? Well, it has to do with many factors. One of them is just simply the whole supply and demand dynamic. Very little supply, very high demand. And in addition to that, we got cheap money, right? Cheap money in the sense that banks are actually loaning money, and we have historic low interest rates. And basically, everyone, it's FOMO, right? They're just rushing to the bank and try to qualify for the loan. But that's still, even if you're getting cheap money, that still doesn't mean you should just jump at the very first deal and just get real estate for the sake of buying it just to say that you bought it. Like, the numbers have to make sense as well. And this is something that we're not seeing happening right now. And here is what I have to show you. So this is a property that we're analyzing sometime this week. And I wanted to use this one as an example just to prove that we are already hitting record high historical prices, and to show you that, hey, there's a lot of demand but very little supply. So this is the area of St. Pete in Florida. And look at my search. My search only show one page with 15 houses, literally just 15 houses in the market. This wouldn't have been the case about a year ago. Every time you conducted a search for any area in the market, you will have at least 2 or 3 pages worth of properties and worth of houses for you to just simply surf around. But we're having only 14 houses available in the market. As soon as they hit the market, they get sold. They get sold in a very ridiculously high price. And here, let me show you. So this was, once again, the property that we were actually checking out last night and sometime this week. And what I want you to see is just to go down to where the stats are on Zillow. So as you can see here, here are the changes in price of the course of, we're talking about what, 8 years or so. And granted, back in 2011, the prices were relatively very low because we had just came out of the real estate bubble. So the market was still trying to adjust itself. But from then, 8 years ago to here, we're talking that the average prices have increased somewhere between 4 to 5 times what used to be. You see 50,000 here, and it's on its way up to 250,000. So we are already in a bubble. And if that's not enough, let me take you down here so you can take a look at the tax history. Now, a lot of you might be wondering, well, what does taxes have to do with everything? Well, it has to do a lot. And for those who have actually been following me for quite some time, you will probably remember an episode that I released a couple of months ago where I talked about how you can negotiate your property taxes with the city or with the town where you have your property at, right? And this year, I wasn't so successful in negotiating much because the appraisers in the area were actually telling me that the comparables in that area where I had my properties at were actually at historical high prices. So even though I was not selling my own properties, other people around me were flipping their properties up or just simply selling it in the market just as it was, without any type of renovations, and they were still getting top prices, top dollars for it. So that, in essence, what it does is that it increases the value of my neighborhood, which is great in a way, but it's not so great when you are paying property taxes because, hey, you're not reaping the full benefits of it, and not just that, it's eating into your cash flow. So what I wanted to do here was actually to show you, to evidence you how prices nowadays have already exceeded the historical high prices from back in 2008. So we're talking about the range of 2007 all the way to 2009. You can see here that the prices are somewhere around, let's just round it up to 40,000. So 40,000 here. We've seen incremental changes up and downs, but very minor changes over those 3 years. And take it from that to today. We're talking about 175,000 as an asking price for the same house, which back in 2008, supposedly the time where the prices were at its peak, we're talking about a much higher price. We're talking about over 5 times more. And I understand that, hey, this is only 175 of an asking price. It is an asking price at the end of the day, and it's up to the buyers to decide whether they want to give the full asking price or not. And your logic might probably tell you, well, just offer less than the asking price. But don't be so surprised because this is what's happening in the market, right? So back to the presentation. Once again, we have high demand and low supply. And you might be wondering, okay, so that's one component. What else? Like it's only one variable. Well, here's the second variable. Because there's low supply and there's already high demand, people are getting into bidding wars. It's ridiculous. And back to the point that we were talking about this house in particular. So we had the asking price of 175. We're talking about people or families who are extremely emotional, who don't seem to learn from history, and they're coming at the market and they say, oh, you know what, this house is 175. I love it. I am in love with it. I do envision myself living in it. And what they do, because they are so desperate to get that house and they don't want to miss out on being homeowners, they come out and they say, you know what, I'm just going to make an offer of 175 and $500, right? I want to make sure that the seller is paying attention to me because I really want this house. Then a second family comes in and finds out, what, there's an offer already for 175, 500. You know what, I'm going to offer 176. And then there's a third family coming in and they're saying, what, there's already an offer in this market? No. I'm going to offer $200,000 for this property because I want it and I know no one can outbid me. So now we're talking about a $25,000 increase over the asking price. And that just only proves one thing. We're in a bubble. We're in a bubble and history is repeating itself. We're seeing it happen once again. People don't seem to learn from, bad instances, bad example from the past. You will think that people will want to keep that in mind, but they always seem to think, no, this time is different because, hey, we're still working from home. But the reality is that everything is still uncertain, right? And just like you can work from home today, within 6 months, the whole scenario may change. And who knows, maybe a bubble might burst again. And this is the reason why you should hold off and buying a property, because you truly don't know what's going on. All we know so far is that we're in the middle of a bubble right now, and it's only going to continue to get worse, right? Now, back to the presentation. So we're up to reason 2. What's the third reason why you shouldn't buy real estate right now in November 2020? Well, I'm sure you've heard of the saying, cash is king, right? Everyone who carries cash around, typically you get to have the winning offer. Well, let me tell you, that's not even the case anymore. And this is something that I was actually discussing with my students over the weekend in our live class. This is basically the scenario they're seeing. And I can attest to that as well because it's what I'm seeing. It's 10 o'clock in the morning. You come in and you see a property you like. You're running the numbers. You're getting ready to make an offer. You contact your realtor at noon, and your realtor is already telling you, I'm sorry, but the house is already gone. It's sold. So that's one. Assuming the house is not sold yet, because maybe the seller wants to take a couple of offers into account. Usually, if you have cash with you, you have the most power. Why? Because you have time on your hand. You can ensure fast closing, right? And for that, you can demand a greater discount because people want to get rid of the inventory fast. And nobody wants a house sitting there for like another week or another month, because that's costing the flipper or the property owner money. So what's happening now is that even if you're making the cash offer, people are unwilling to take that because they prefer to wait for the higher premium. Why? Because we're talking about big premiums. We're talking about five-figure premiums. We're talking about $25,000, sometimes even $50,000. Sometimes you might even get $100,000. That's worth your time waiting. So what used to make sense with cash, it no longer works at this point in time, because people are more focused on getting the top dollars, especially because they know they can demand that because there's no supply in the market whatsoever. Next point, and this is something that hasn't appeared in the news, and mortgage companies are actually keeping this very quietly, but it's something that I experienced myself firsthand last month. So I have a couple of mortgages with small local community banks, and they have been servicing my mortgage for the past 3 years or so. And what's funny is that now I'm seeing the transition from all these smaller banks to big companies like Mr. Cooper right here. So let me show you. This is Mr. Cooper right here, right? So I'm gonna get rid of the Spanish text. Welcome to Mr. Cooper, and consider yourself up to first class. They are the nation's largest non-bank home loan servicer. So what does that mean? So Mr. Cooper in itself, they're not a bank. What they do is that they manage mortgages. They're the ones sending you the bill. They're the ones collecting the payments. They're the ones in charge of distributing your mortgage payment towards your principal and towards the escrow account and towards interest rate, whatever is it that it's making up your mortgage payment. So now a lot of you might think, well, this is not a big deal, right? It's just mortgages get sold all the time in the secondary market. But pay attention to this. We're talking about timing. We're talking about the timing here because we're talking about a transition of lots and lots of mortgages to a much bigger institution. Why? Because small banks, think about it, they are short on staff. They have a good work dynamic and where they work well as long as they're handling a certain volume of activities. But why would they transition into a much bigger company? Because these banks, the market in general, is anticipating a big change, is anticipating a wave of foreclosures coming their way. So these smaller banks, they don't deal with the sheriff. They don't want to go out to you. They don't want to have to worry about executing a foreclosure, so to speak. They don't want to have to send their staff down to the courthouse and be fighting over liens and stuff like that. So what they do is that they transition that into the bigger institutions like Mr. Cooper, and they have the bandwidth, they have the capacity, they have a department that's solely dedicated to foreclosures, a department that's fully dedicated to collection, and you name it, right? So once again, it's not widely or openly talked about in the news because politics and COVID seems to take up most of the news. But in the meantime, this is cooking in the background. This is happening. And it only takes attention to details. Things like this, it's what's going to lead you, what's going to give you the cues. Hey, something big is about to happen and you need to pay attention. So what does that have to do with anything? Well, it just simply means that if they're expecting a bunch of foreclosures, that means a lot of people are going to be unable to pay for their mortgages, one. Second, we are in a bubble, and that means that it's about to burst anytime soon. Call it December, call it March, I don't know. Only time will tell. I have spoken to a couple of experts, like, for example, my realtor is saying she's expecting to see changes somewhere around December and January. I personally think it's going to take a little longer than that because of the whole forbearance that it's in place. And most banks, most lenders are allowing people up to 12 months to 18 months. So The real change, at least on my end, I expect to see that somewhere around March, all the way to the summer months. So just stay tuned and see what happens, but it is coming, right? And that's why you shouldn't be thinking about buying a property right now. You should be, if anything, setting that money aside and waiting for it to basically just drop so you can, take advantage of properties at a big discounts. Now back to the presentation. We have point number 4, right? And then the last point, which is sort of I touch on that earlier in this video. Property taxes, right? They are ridiculously high, which only proves that we are already in a bubble. Like I said, I had this conversation with my appraiser a couple of months ago, and he, or they, because they're a team of appraisers in different areas, they actually attested that, hey, prices are going up and we cannot help you. I know you disagree with the assessment, but numbers don't lie. And this is what's been recorded in our county. And these are the prices. And it only shows that, hey, it's just simply going further up. And here is to recap, right? So we have these 5 reasons as to why you should not be buying any real estate property right now and why you should hold off until a couple of months later. 1, we are getting very high demand, very low supply, and that makes homes entering the market to be extremely overpriced. 2nd, low supply, and we got a bunch of emotional buyers getting into bidding wars. Number 3, cash is king, or at least it used to be, and not even that can save you nowadays. Number 4, the migration of mortgage servicing companies, and number 5, high property taxes. And because you stay all the way until the end, I actually have one more bonus tip for you to look into that's going to help you make the best decision when it comes to investing in real estate. But before we move on, if you're enjoying this episode, do not forget to hit the like button down here so you can help this episode rank and help others like you who are looking for this type of information. So now, the bonus tip. Let's just look at gold. This is very interesting. So let's just go back to this year. So this is the dynamic of this year. So this is the gold price nowadays. We're at, you round that up to 1900. And you all know, or you all remember what happened somewhere in the middle of March, beginning of April. We had a bit dip, right? We had a bit dip because that's when a pandemic was officially announced. The markets rallied, the stock market went down, yada, yada, everything was impacted. But from then on, look at the rise of the price of gold. Why does it happen? Because investors are losing confidence. They're losing confidence in the dollar, and it's a behavior that people tend to adopt when they're trying to preserve their wealth. They're just simply shifting from one asset, in this case, paper money, into the precious metal, which is a different kind of money, right? In order to fight against inflation and preserve their money and keep its value. Now, why does it have to do with everything? You might be wondering. Very simple. Let's take a look at this chart from 20 years ago and look at the behavior. So a lot of this will start looking familiar to you because look at how history repeats itself over and over again. So we have the dot-com boost somewhere around 2001 and 2003. And then from this point on, we had a big shift, a big increase in the value of gold. And look at what happened. So we got to this point, and then 2007, 8, 9, we had a big dip, right? Because that's what tends to happen. The bubble burst back in 2009. The real estate bubble, boop, just bursted. And guess what happened? Investors are losing confidence in the market, and look at the extreme rise, very, very extreme, all the way up. And then from then on, we had this drop, but gold has been waiting to, fighting back to come back into the market. And gold has just simply, hiding, staying low, waiting for the next moment to happen. And right around this time, somewhere between 2013 and 17, this is when we started enjoying the recovery of the market. People seem to have forgotten about what happened in 2008. Consumer price index, people are buying homes, flippers are hitting the market again, and yada yada. And then it just continued to move. But then see what happens in 2008. Exactly towards the end of 2009, that's when you hear about the first COVID case in Asia, right? So you start hearing it from China, and then from then on, it started expanding all the way to Europe and Italy, and that's when the shutdown started happening. So once again, we have this big dip, and gold manages to come up, and then it drops again back in March, and then it just skyrocketed all the way. So this behavior that you see here, here, and here, it's a historical behavior. It's something that it repeats itself, and just it helps evidence that, hey, the market is fluctuating, we're in the middle of a bubble, there is loss of confidence in the market, and therefore you should hold off in investing in real estate. That, along with all of these other articles, all these other examples that I was showing you, should be enough to corroborate my point as to why you should be holding. You can, wait all the way to December and January to see what happens, just like my realtor suggested. And if nothing happens then maybe my assumptions will be proven right, and maybe the change will start happening somewhere between March and April, right? And hopefully this will help you make a better decision. As you can see, real estate is not about just simply looking at beautiful houses, just walking in and say, oh, you know what, this is great, I'm just going to jump in and buy. No, looking at beautiful houses is actually the easy part of it. The difficult part is, one, putting your emotions on the side and try to remind yourself, hey, you're buying this property to invest. It's not for you to live in. Second, be willing to run the numbers. And third, what takes the most work, be willing to do the market study, not just the market study, what happens around, but also to connect all of these moving pieces together, like you see here. This article right here, this changes in a mortgage servicing company, what happens to gold. All of that plays a role into your decision making. And I'm sure you are here because you want to learn. That's why you're watching this episode. And for those who are brand new to the channel, or perhaps if you haven't done so already, here is a link to a webinar in the upper corner right here, where you can actually just click on it and sign up for a webinar and learn how to invest in real estate the right way, and it's free of charge. So make sure you sign up for it, because my team and I, we put in a lot of work into creating this amazing content, and we really hope you get to reap the good benefits of it. So that's pretty much all I have for you today. Hopefully you enjoyed it, and until then, I will be seeing you in the next episode. Take care. Bye bye.